Hello, Melissa Scholz here with Scholz Nonprofit Law, and my colleague Jeff Femright will be presenting with me tonight, so you'll hear from him. And then I also have colleagues on the call with me, Sarah Kissel and Jessica Harrison. All of us are attorneys, and we do all kinds of different type of work for nonprofit organizations. But in this case, we are actually focusing not on nonprofits tonight, though we're happy to answer questions about that because it is the same program, the same forms, the same rules apply to nonprofits as well as businesses, and sole proprietors, individuals who are in business or people who are working like as a contractor. So it's the same, all the same program. And, there's different ways to qualify. So tonight we are, again, I'm sure Jeff will get into this, but we're focusing on the first draw of the Paycheck Protection Program. I've been referring to it as the PPP 1. And that's the same program with some modifications that took place last spring and through the summer. And if you didn't get a loan then that's the program you have to apply to now in order to get any type of funding through this program. If you did get a PPP 1, or if anyone did in the past, then there is a second draw, or the PPP 2 program that was announced at the end of the year. So that's, I think, all I have for announcements. You can see we're a really small group. We will let Jeff talk without too much interruption, but then I will be watching the chat and answering questions directly there, or finding a good time to interrupt Jeff and ask questions. And then we will definitely have time for you all to ask questions as well when we're done or when we get to different segments. So with that, Jeff, why don't you go ahead?
All right. Thank you, Melissa. This evening, what I'm going to do is I'm going to talk just generally about the PPP program and how we got to where we are. Then I'm going to go through a short PowerPoint that I prepared that takes you kind of step by step through the process and documents the various requirements that borrowers have to comply with, both in applying for a PPP loan and then at the end, hopefully securing full forgiveness of that loan. And then at the very end, what I'm going to do is walk through a very short application that I filled out, and you can see basically the types of questions that they ask in those applications. So I am going to start. Melissa, can you turn my screen share on, please?
It should be on now. It should
Okay,
be on now.
great. All right. So you should all be looking at the first page of a PowerPoint dated today. And as you can see, we're going to be talking about the Small Business Administration, SBA's Paycheck Protection Program. This was a program that was established back in March. And Melissa and I were talking earlier today about how far we've come with this program, because the program is, as you can tell by its name, is primarily intended to provide businesses with funds to maintain their workforce. The goal of this program is to keep people working. And when the program was initially established back in March, it was unbelievably complicated. The initial loan application was 17 pages, included several schedules. It was a mess. And a lot of us here on this call from Scholz Nonprofit Law, we, we spent many hours helping our clients kind of navigate the program. What happened over the course of the spring and the summer was, we weren't the only people who thought that the program was a mess. There's 330 million people in this country, and a lot of members of Congress heard from people, like all of us, that, this was just too complicated. People were not taking advantage of it because they didn't understand it. And so the program was revised, and then it was revised, and then it was revised, and then it was revised again. And every time the revisions came out, the application form for both applying for the loan and for applying for forgiveness got cleaner and more streamlined, and the terms of the loans got more beneficial to the borrowers. And so finally, by July, they had gleaned everything down to a pretty straightforward 2-page application that we're going to look at a little bit later. And that's what was used primarily for the first part of this program. And the program then closed, and it's called, there's some vocabulary to learn, but the portal, you're going to hear the term portal both from us, from your accountants, from your lenders. The portal closed in August. And so and when the portal closed in August, there was $137 billion left. And so from August until December 27th, nothing really went on with the program. On December 27th, the president signed the newest piece of legislation into law, and that created the kind of what we call PPP 2. So the stuff we did in the spring was PPP 1. The new things are PPP 2. So part of that process, what they did was they said, hey, for people who didn't, PPP 2 is really going to, PPP 2 or what they now call second draw loans. Those are going to be for businesses that took advantage of the PPP 1 this spring. But we recognize that there's still a lot of businesses out there that never accessed this program when they had the opportunity in the spring. And so they took that $137 billion that went unused, and they reopened that original portal. And, that's what we're going to talk about tonight, is the opportunities that are available for organizations that have not yet borrowed under the PPP program, and what the SBA is now calling those our first draw PPP loans. Which takes us to our first slide. Again, December 27th, a couple weeks ago, the Economic Aid Act authorized the SBA to guarantee additional lending to first-time borrowers under PPP. Okay, so there's second draw available for people who previously borrowed, but if you haven't borrowed, you now can under PPP. And it reopened the existing portal that had originally closed back in August. So who's eligible? Can your organization borrow under this program? You are allowed to borrow under first draw PPP if you are in operation before February 15th, 2020. So if you're a new organization that's been organized in the last couple of months, you can't. Otherwise, you should be able to borrow under this loan. And because it's the Small Business Administration, your organization has to have fewer than 500 employees. And when you fill out your application, you have to make a certification that says, quote, uncertainty of current economic conditions makes necessary the loan request to support the ongoing obligations of borrowers. So the 17 pages of documentation that I was talking about from March, that has now all been reduced to this simple certification. If you can certify that your organization is dealing with uncertain economic conditions because of COVID, then you're allowed to apply for the loan. Okay, so first, even though the program is an SBA program, the applications actually don't go to the SBA, they go to traditional lenders. First draw applications are submitted to traditional lenders. So if you want to apply for a loan, the best thing to do is go to a lender who knows you. If you have a relationship with a lender, especially if you have a credit relationship, that's where you should go first, because those are the folks who know you, and they're going to be the ones who can, because they know you, they're going to be able to streamline your application. If for some reason you don't have a lender or you don't have a credit relationship and you're having trouble finding one, feel free to contact us. We have relationships with some lenders who've indicated they might be willing to help. So while we can't guarantee anything, we know some people who have an appetite for taking on additional loans. If you want to take advantage of the program, the deadline is March 31st, 2021. So you've got 2.5 months to put your application together if this is something you want to pursue. Okay, now in dealing with
Jeff,
yep,
we'd recommend doing it sooner in case money runs out.
we do.
Yes, so we don't think it's going to be a mad race to get this money like it was the first time around, but we do think if you're thinking about doing it, you should get going.
Yep, that's a good point. Again, this spring, the first round of financing, I think it was something like $500 billion, was gone in a couple weeks, and they had to refund the program to make it continue. So, it's always better to apply sooner rather than later. And again, we know people if you need help securing a lender. Okay, now, even though the loans are guaranteed by SBA, the lenders still have what they call know your customer requirements under the Bank Secrecy Act. So what you want to make sure is that you are organized. You want to make it easier for your lender to say yes, or you want to deliver a package to them that is so organized that they're going to jump you to the front of the line. The one piece of feedback we've gotten from our lender friends is that a lot of borrowers, especially small business borrowers, come in with a notebook full of loose leaf paper. They're not organized at all. They haven't filled out the application. They haven't done, they haven't gotten their resolutions authorizing the loan. And those loans are a mess for the lenders and are going to get treated badly. If you come in with an organized package that they can simply turn over to SBA, that's going to be to your benefit. So when you meet up with your lender, make sure, one, that you have your supporting documents all organized. Two, that you've got an officer's certificate that includes articles of incorporation, a certificate of status, and bylaws for your corporation. And make sure you have resolutions authorizing the transaction from whoever has to authorize it. All right. If you need forms for those documents, we have those on our website. And the feedback we've gotten from a number of our clients from the spring was that the bankers really like them. When you come in with an officer's certificate, that makes their job easier. So
Okay,
easy to
say we've got someone who's a sole proprietor and they don't have a board, they probably don't have any of those documents. They don't have articles, they don't have bylaws, they might not even, they might not be incorporated, they might be an LLC. So if businesses, that, just have one owner, just know that some of that those requirements don't apply.
Yep.
Is there still a certificate of some kind that, that you basically certify for yourself?
No, because if you are a sole proprietor, you're coming in and saying, hi, I'm
You
Jeff.
have the authority.
I want to borrow this money.
Yeah.
So
Yeah.
all of the formalities go out, but the second that you have a organization, even if you are a single member limited liability company, there's going to be some documentation that the lender is going to want to see.
Yeah. And then one other point I want to make for those that are new to this topic is that independent contractors or consultants also qualify. So when we talk about a sole proprietor, that's really the same. And again, wouldn't have to have the certificate or, these other documents. So looks like a question. Is this a link on our website? No, it is not. We're going to, it's similar, Jonathan, but we will post these when when this is over, and we'll send out the updated ones. But what's on our website right now is from last spring. Okay, go ahead.
Yeah, we'll put these up. When do you think these will go up, Melissa?
Tomorrow. Yeah.
Okay. All right. Continuing on with how you work with your lender. The other thing that you want to make sure that if you have any other loans outstanding, you're going to want to take a look at those documents to see if there's any loan covenants, if there's any debt service coverage ratios, if there's any kind of limitation on incurrence of additional debt. You don't want to apply for this loan and violate some covenant in some other loan. So that's just something you should take a look at. All right, so PPP loans generally, what are the loan terms? First of all, they're 100% guaranteed to the lenders. And SBA does that so that the lenders are willing to lend. There are a lot of these loans coming into lenders. If they had to underwrite each and every one of them, it would slow down the process considerably. What the lenders are doing is they just want to make sure the paperwork is filled out accurately and neatly, and then they're going to submit the loan because they are looking to SBA to guarantee the loan, not you. And because of that, there's no collateral and there's no personal guarantees, and there are no loan fees to you. The SBA is paying all of the loan fees. And once you get a loan, we're going to talk a little bit later about loan forgiveness. At the end of the day, the goal is for your organization to be able to secure 100% loan forgiveness. But if for some reason you don't get loan forgiveness, any amount not forgiven will be charged 1% annual interest. And the maturity of the loan will be 5 years, but it's not 5 years from the date of loan disbursement. It's 5 years from the date that your lender is given the forgiven amount, or 10 months after the end of your covered period. And we're going to talk about what the covered period is. So maturity doesn't start right, or your 5-year loan term doesn't start right away. It happens sometime out in the future, about 10 months from now.
So let me just elaborate on that a little bit. It looks like we've got a new participant. I think, is it Wandy? Welcome. Just know that we will send these materials out at the end, and perhaps we can stay on at the end and answer some questions for those that are joining late. So forgiveness basically turns it into a grant. So it's called a loan, but later on you file, and Jeff will get into the details, but you file another form with the lender which could be a bank, a credit union. There's big banks, small banks, like community banks. Some nonprofit financial institutions are doing this. And if you can prove that you've spent the loan on the right things, mostly payroll, then the government will decide that it's not a loan anymore, and they turn it into a grant. So when we talk about forgiveness, that's what we're referring to. So it's really valuable because you just get $50,000, say that's how much you are able to borrow, and it doesn't count as income, so you don't pay tax on it. And, presumably, most people do not have trouble spending it on the right things, because the reason most people are getting these loans is to keep their staff employed or to pay themselves, which is, a very legitimate purpose. Obviously, when we're talking about sole proprietors, really small businesses, there may just be one or two people that are getting paid. All right, back at you, Jeff.
Okay, so kind of getting to what Melissa was just talking about, the goal of the program, the goal for every borrower should be, one, to secure a PPP loan from the lender, and then secure 100% forgiveness. As Melissa indicated, your loan is entitled to be forgiven if you do the right things. Okay, what are the right things? If you want to achieve 100% forgiveness, the borrower is going to need to spend 60% of all of their PPP loan proceeds on what are called payroll costs. And we're going to get into that. And not more than 40% of loan proceeds on other permitted uses. And we're going to talk about that. All of this has to occur during a 8 to 24 week covered period that the borrower gets to select for themselves. Okay, so what you want to do for 100% forgiveness is to spend 60% of loan proceeds on payroll costs, 40% on other permitted uses, and do that all in a 8 to 24 week period that you get to pick yourself. Okay. All right. So the loan size, how big a loan can your organization get? Okay. Loan size is the lesser of $10 million or 2.5 times borrower's average monthly payroll costs. Again, you're going to see payroll costs over and over and over again. The name of the program is Paycheck Protection. The goal of this program is to put money into your employees' pockets, or if you are a sole proprietor, into your own pocket. Okay, so a lot of the calculations are going to be based on this magic concept called payroll cost that we'll get into. Okay, so how do you calculate your average monthly payroll costs? Generally, the basic rule that most organizations are going to use is you calculate average payroll costs based on either a 12-month period prior to the loan application or all of calendar 19 or all of calendar 20. Now, as a practical matter, because all of calendar 19 was pre-COVID, if you use numbers from 2019, for most borrowers, not all, but for most, that's going to generate the largest loan size. So you're all going to have to do it for, you're going to have to do the math for your various organizations, see what works best but you should probably start with calendar year 19. And basically what you want to do is you want to take your payroll costs from 2019, divide it by 12, the 12 months in 2019, and that's going to give you a number. That's going to give you your average monthly payroll costs, and you just take that number, multiply it by 2.5, and you have your loan size. All right, so we've been talking about it, alluding to it. So what are these magic payroll costs? What do you put into that calculation that you multiply by 2.5? So first of all, you put in compensation to employees residing in the United States of America. If for some reason you have employees abroad, you cannot use compensation to those employees in this calculation. In addition to that, if you have any employees that have salary or wages in excess of $100,000 a year, then amounts above $100,000 a year are excluded, okay? And if you have seasonal workers, you're gonna have to annualize that $100,000 amount. So if you say you have employees that work 6 months a year, that would be any amount over $50,000. So keep in the back of your mind, you kind of always have to eyeball compensation that exceeds $100,000 a year. Oh, sorry about that. Okay, so payroll costs includes compensation. It also includes tip or the equivalents. It includes payments to employees for vacation, parental, family, medical, or sick leave. It includes allowances for separation or dismissal, payments for employee benefits like group health coverage and retirement. It includes group life, disability, vision, and dental insurance premiums, and it includes state and local taxes assessed on compensation. So all of that goes into the mix for your annual payroll or your average monthly payroll costs that are then multiplied by 2.5 to get your loan amount. Okay, now, not everyone fits into the general basket, and because we're anticipating that we're going to have smaller groups here, here's a couple of variations on payroll costs. Quite frankly, these start to get complicated. If you need some help working through this, we're certainly happy. Pick up the phone, give us a call. We're certainly happy to try to help you walk through this. But for self-employed people that don't have other employees, you just work for yourself, and you have to calculate payroll costs for the purposes of your PPP application. I keep doing that. What you do is you take a look at your Schedule C from your 2019 IRS Form 1040, and you take the net profits from line 31 of Schedule C. You take that number, you divide it by 12, again, 12 months, and that is going to give you your average monthly payroll costs. And then you take that average monthly payroll costs and multiply it by 2.5 for your loan size. If you are self-employed, but you also have employees, what you do is you basically do the same calculation we talked about in the note above, but then you also add, the gross wages and tips for all of your employees, plus all of the other payroll costs for the employees. That's, anything that you put into retirement funds, health and dental, vision, separation payments, etc. And then you take that, you do that math, get that number, divide it by 12 to get the average monthly payroll costs, and then you multiply it by the magic 2.5. Again, I went through that fast. Even these little bullet points are summarized. When you do your applications, you're going to have to be careful to make sure that everything is done carefully in these calculations, and we're happy to help walk you through that if you would like. Okay, we talked a little bit about, what happens if you're a seasonal employer, a lot of agriculture, A lot of the arts programs just run seasonally. How do you figure out your payroll costs? Okay, so if you're a seasonal employer, what is a seasonal employer? You're an employer that operates less than 7 months a year, or you're an employer that has gross receipts for any 6 months that are less than 1/3 of the gross receipts of any other 6 months. If you meet either one of those tests, then you're a seasonal employer and you are allowed to calculate your average monthly payroll costs for any 12-week period between February 15th and February 15th, 2019 and February 15th in 2020. So you take one of those tests. If you pass one of those tests, then then you're a seasonal employer. Then you take any 12-week period you want in the year between February of 19 and February 20, and you use that period to get your payroll costs and you multiply it by 2.5. If you are a brand new organization that started up in 2020, but in the first 6 weeks of 2020, before the cutoff deadline of February 15, 2020, you can take 2.5 times the average payroll costs since February of 2020. Okay, I went through those fast. I realized that you're going to have to kind of work through that a bit in the application itself. Okay, so now you've got a loan. We've determined the loan size. We've used your payroll costs and 2.5, and we've gotten a number for you. So now you look in your bank account one day and there's a wire transfer in from your lender, and you now have all this cash. So how do you use the cash? But not only how do you use it, but how do you use it in such a way to get all of the loan forgiven at some point down the road? First of all, the most important thing you need to focus on, and you're going to hear me talk about it over and over and over again, is focus on your 60-40 split. If you have at least a 60-40 split, that's going to put you in good shape for full forgiveness. So, first of all, you can't use loan proceeds on anything. You can only use them for certain permitted uses. The SBA has said that PPP loans are only used for certain things. So what can you use them for? Well, payroll costs. We know all about the payroll costs, right? Because we just went through them. So you've got payroll costs. Again, keeping in mind your goal is to make sure for full forgiveness, you want to use at least 60% of your loan proceeds on payroll costs. But you can use it on other things as well. You can use it on mortgage interest. If you own a building and you have to, you pay your mortgage, figure out what the interest is on that, you can use that. You can use loan proceeds to pay that amount. You can use it to pay rent. You can use it to pay utilities. Okay, you can use loan proceeds for software, for cloud computing, for human resources and accounting needs. I think we should add legal needs there, but it's not in the program. So software, computing, human resources, and accounting. If for some reason during the protest this summer, you had property damage and that property damage was not covered by insurance, uninsured costs related to property damage caused by civil unrest, you can use loan proceeds for that. You are allowed to use loan proceeds for supply chain costs. So if you have supply chain needs pursuant to a written agreement, you just can't buy supplies. It has to be pursuant to a written agreement that was executed before December 27th, 2020. Some sort of supply contract or a purchase order, then you can use you can use loan proceeds for supply chain needs.
Jeff, what supply chain needs?
So
What's another word for supply chain?
So basically supplies. So your your company makes bread, and you gotta buy flour, you gotta buy milk and eggs and salt and
Yeah.
baking powder. Those are supplies. Presumably you're probably getting all of those supplies from one of the big national vendors like Cisco, and they pull a truck up to the back of um, your business twice a week and they drop off supplies. Okay. If you've got a written contract with them that says, or you send them a purchase order every week that says, oh yeah, you have to drop off this much flour, you have to drop off this many eggs, we need this many gallons of milk. Those are supply chain costs. Anything that goes into making what you do. If you make furniture, the
Right.
wood, the tools, the varnish,
But you can't just go to Costco and buy it. It has
you
to
cannot.
be.
It has to be pursuant
Yeah.
to some sort of written agreement that you've got and that you have with your regular suppliers. Okay.
So we have a question here. If I'm in agriculture, would feed for animals be considered supplier costs? Does the
Yes.
purchase have to be based on a contract with the supplier?
It has to be based on a written agreement with the supplier.
I mean,
And it
there
has
is
to
your
be-
comment about perishables. How is that different?
So in the regulations, it makes a distinction between perishable goods. So going back to my example on furniture. So the wood, the screws, the varnish you need from your suppliers to make furniture, that would have to be pursuant to a written agreement. If you are purchasing perishable goods, those can be purchased at any time without a written contract, and they would still count as supplies.
So you could go to Costco for your berries for your dessert. Let's see, got
Right.
it. Okay.
Yep, and that kind of goes to there's a theme in the latest revision of PPP that's really focused on restaurants. For example, if you are a restaurant or a bar, that 2.5 calculation can be boosted to 3.5. Here you have some benefits with perishable goods, which are food industry type items. So kind of thematically in PPP, you get a little bit of a boost of the benefits if you happen to be a bar or a restaurant.
Yeah, got it.
Okay.
Right.
So the final permitted use of loan proceeds, along with all these other things we've been talking about, is cost for PPE. So if you are paying for PPE for your employees, for your customers, anything to comply with COVID-related safety guidelines, those costs are permitted use of loan proceeds. Okay. All right. So now we get to the part that everyone is most interested in. How do I get my loan forgiven? Okay, so it's a loan, but is it really a loan? Because the plan all along is to make sure it's forgiven. So how do you do that? Again, and I said I would repeat it, and here I'm repeating it again. 60% of the loan has to be spent on payroll costs. All right, so just always keep an eye on that. And the more you spend on payroll costs, the easier it gets. Okay. And it's payroll costs during your covered period. So what is that covered period? We said it was between 8 and 24 weeks. Okay, so the cover period starts the day that you get your loan proceeds, right? And then it terminates on a date that you get to pick. But that date has to be somewhere between 8 and 24 weeks after loan disbursement. So for the sake of math, let's just say on January 14th, you get, today's the 14th, right? So today's 14th, you get your loan. So 8 weeks from now, so roughly March 14th, that would, your covered period can be from now until March 14th, or it can be now until June 14th or July. Anyway, 6 months from now. Okay, you get to pick that yourself. For most borrowers, for almost all borrowers, that 24-week period is going to be the most beneficial to you. Okay. All right, for 100% forgiveness, borrowers must use loan proceeds on permitted uses during borrower's covered period, and 60% must be for payroll costs. Okay, now that's the rule. That's how you get to 100% forgiveness. But we all live in the real world, and every business is different. Okay, and so the 60-40 split and the 8 to 24 week covered period, those are rules you have to comply with for 100% forgiveness. But maybe as much as you would like to get 100% forgiveness, the problem with your business is not your payroll costs. You have high rent costs, or you have high supply chain costs. And as much as you would like to get 100% forgiveness, you just can't. That's okay. That's not a problem. It's not illegal. It's not a violation of anything in the loan. You can use loan funds for any permitted use, and the funds can be used outside of the covered period, and you can use funds for less than 60% of payroll costs. But if you do that, that's going to reduce your forgiveness. So your whole loan may not be forgiven. So for the sake of discussion, let's just say you've got a $100,000 loan, and you haven't been able to and you had to use more on supply chain than payroll costs. At the end of the day, you might be entitled to, say, a 50% loan forgiveness. So we had a $100,000 loan, 50% would be forgiven. The unforgiven amounts would then need to be repaid at 1% over 5 years. That's still a pretty good, that's a pretty good loan term. So, just so you know, obviously the goal is everybody wants you to get loan forgiveness, but if for some reason you can't, there's nothing wrong with that. There's nothing illegal about it. There's no violation of a contract for doing that. You're just going to have to pay the interest on the unforgiven amount over the next 5 years. Okay. All right. And now we're just going to jump over to the application itself. This is a good place for questions if anyone has any.
Well, I'll just comment on what I was typing in the chat. So Jonathan, you asked, how do you demonstrate that the proceeds were actually spent on payroll? So they're not tracking those dollars. It's not like a government grant audit. You demonstrate it by proving that you have sufficient payroll, right? I mean, you're reporting payroll expenses to the government anyway. So there are ways for them to document that. Now, it so happens, like we did get a PPP loan, and I did leave it in a different account when it came in, and I did spend it all on payroll so that it was just really easy to track. But you're not required to do that. You just have to be able to document that you had sufficient payroll expenses.
Yep. Okay, so as I said, and you can see, page 1, page 2. That's it. This is the application. Again, a significant improvement over we the type business are you a sole proprietor? Are you in this case, I have I've set us up as a nonprofit, but you can be a for-profit, you can be a limited liability company. We've got that. You have to if you have a trade name, you should put that in. So for example, The company that we all know is Google.
Wait, Jeff, we don't see, are you on a different document now?
Yeah,
Yeah, you got to click and share that separately.
sorry. How's that?
There you go. Yep.
Okay, sorry about that. So here is the, so this is the application form. It's 2 pages. It's got some instructions. So up here, you just say what type of business you are. If you have a different trade name, you say that here. So I was saying the company that we all know as Google, the actual corporate name is Alphabet Inc. And so down here, the legal business name would be Alphabet Inc. And for trade name, you would say Google. So if you are, 1-2-3-4 corporation, but you operate a cookie stand as Sam's Cookies, it would be Sam's Cookies here. Okay, and I said this yesterday, I should have said it up front. I am making all of this up. I literally just went through and made up things to put in here because I wanted to demonstrate how you fill this in. But obviously, you're going to need to do, you're going to need to fill out each of these boxes for your own organization. So year establishment, I said we're established in 1991. I've got the name of the company here. My NAICS code is here. I'm saying that we have less than 500 employees. That qualifies us as a small business. We work at Oak Lane here in Madison. Here's my tax ID number. Here's my phone. The primary contact at the company is John Miller, and you can find him at this email address. Okay, so now we get into the guts of this. So, this is right here how we're calculating our loan size. We went over and over again how we got to the average monthly payroll. And we did that for, how things normally work, how they work for sole proprietors with employees, for seasonal, but each one of those calculations came up with this magic average monthly payroll. We take the average monthly payroll times the 2.5, and we got 200, our loan amount, this is now our loan amount, is $250,000. I'm saying we have 6 employees, and these are all those permitted uses that we talked about: payroll costs, rent and mortgage, utilities, operation expenditures, damage from the protests, supply chain costs, PPP costs. So these are where you say, you have to use the loan proceeds for permitted amounts. That you're not, if you can change your mind later, but initially you should say, okay, this is what we think we're going to use it on. I've set this up as a nonprofit corporation, which really doesn't have owners. So I'm going to attach something here that explains that we don't have owners. If you do have owners, if you're a sole proprietorship, you should say, the owner of Sam's Cookies is Sam Smith, and, he's the president and he owns 100%, and here's his tax ID number, and this is where you can find him. If you've got, 5 owners, each of whom own 20%, you just list those names there. If you need more space, you just add something on the back of the application. Okay, the application itself is pretty straightforward. The SBA is just asking you to certify a bunch of stuff, and I went through with a pink marker here to kind of highlight the kind of important issues. So first of all, you're certifying that that nobody in your organization has defaulted on any government program or has been involved in any bankruptcy. That you're not delinquent or defaulted in either an SBA or a federal government loan. If you are under common management with another business, they want to know that. If you are, you're going to have to add an addendum A. This goes back to, if you might recall from the spring, there were a bunch of big companies that were taking advantage of this small business loan by, having all of their various subsidiaries apply for loans, and SBA was not very happy about that. So that's what they're trying to prevent. If you really are a small business, it really doesn't matter. They're not terribly concerned about you, but obviously answer that correctly. If you've received a EIDL loan between January 1st and April 30th, 2020, you fill this out here. I have yet to meet anybody who has gotten an EIDL loan in that period, but they ask it. Has anyone been incarcerated or subject to indictment for fraud or other criminal badness? Again, similar in the last 5 years, has anyone committed any felonies or been convicted of false statements on loan applications there? Do all of the employees work in the United States? That should be a yes, because loan proceeds can only be used for employees in the United States. 8 and 9 have to do with franchises. Okay. So here's where you are certifying, I've read the statements in this form and you understand them. You are eligible. How are you eligible? Well, you come down here to this certification. Current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. Again, the 17 pages that we have in the spring is now reduced to that certification. So you're saying you're eligible, and here's where you're saying it. Here it says what type of organization you are and that you are an organization that is eligible to apply for the loan. You're saying that you're going to comply with all civil rights laws. You're saying that the loan proceeds will only be used for, this is our permitted uses section, loan proceeds will only be used for business-related purposes specified in the loan application and the Paycheck Protection Act rule. Those are the payroll costs, the insurance or payroll costs, mortgage, interest, rent, utilities, supply chain costs, etc. That you're not engaged in any illegal activity, you don't have an EIDL loan. And then you initial these here that you were in operation before February 15th. If you weren't, then you're not entitled to access the program. We've talked about the certification here. You're going to use the funds to maintain payroll, for mortgage interest, for rent, for utilities, for covered operations, property damage, supply chain costs, worker protection expenditures. Here's our 40% that you're going to try to use it for payroll costs and not more than 40% then for non-payroll costs. You haven't received another loan under PPP. For some arts organizations, if you're an art organization, there's a new program called the Shuttered Venue Operator Grant. For some arts organizations, that grant might be a better deal than the PPP loan. But what you need to know for the purposes of this application is you can't do both. If you're an arts organization, you might want to take a look at the Shuttered Venue Operator Grant. And if you decide to go in that direction, you're not going to be able to get a PPP as well. You are not in business with the president, the vice president, or any member of Congress or the head of any executive agency. You're not a issuer of securities. You're not a company that has public stock. And that you're saying that all of the stuff in here is true and accurate, and then you sign it. And that is it. The rest of it is instructions. So it's a really straightforward, fairly user-friendly document. And so, yeah, so that's really all I had in terms of prepared material, but certainly happy to field questions.
Great. I'm going to stop screen sharing.
Okay.
And go to, oh, actually, why don't you stop screen sharing, Jeff? There you go. Oops. All right. Yes, we are, will the see attached document in the example be in the, will we put that up tomorrow too?
Oh, can I screen share again?
Oh, sure. Sorry.
I'm sorry, that's my fault. Just the see attached, there's the attachment. So it's just a Word document that you slap at the back of the application itself.
Got it. So answer is yes, it will be available, but all right. Let's see who else. Any other questions? For those that joined us a few minutes late, we will be sending these out, the presentation out by email. That form will also go out. The sample will go up on our website. We're happy to answer individual questions. As I said at the beginning, the forms and the instructions, they're all the same, whether you're a one-person business that does photography. I have no idea, maybe you're a 20-person business, but I see we have a photography studio online here. A website designer, own a restaurant, or run a nonprofit organization. It's just, there's different ways you're going to be proving what your payroll expenses are. And of course, you will have different kinds of expenses, but you have the same tests and the same forms that have to be filled out. So how do we find our NAICS code? I think that's on your Form 990, Jonathan. So we can direct you to that. So, and Carol, for agricultural activities, I feel like I saw some different, what was that guidance on how you establish payroll?
There is specific guidance for farms.
Yeah.
I didn't put it in the PowerPoint, but
Yeah.
yes, there is absolutely a different calculation of payroll costs for farm businesses. I didn't include them in the payroll.
Yeah.
In the PowerPoint.
Carol, I have your email and I will send that. To you. So question, what is the next class and where do we sign up? So we don't know for sure. We are working on that. We will send an email out and you will be able to subscribe or unsubscribe. But most importantly, what I wanted to tell you is that we will be providing Spanish language materials as well next week. And we will both have translations of Jeff's work, and the SBA already has these forms in Spanish up on their website, but we also want to provide guidance. And we will do a webinar. I think we'll be partnering with the Latino Chamber of Commerce. And so you can watch or tell people to look there for publicity or keep track of our website. So, all right. If there aren't any other questions, you're welcome to come off camera. Come on video, come off mute. And if you want to just ask us a question directly, you can. Otherwise, we can wrap it up early. Oh, one other thing, seeing Sarah's face, seeing my colleague Sarah, I'll get to you, Carol, reminds me that there's a whole nother set of issues that, obviously have come up during COVID and that the government has tried to help address around unemployment, what your obligations are in keeping people employed, what happens if you have to lay them off or lay them off part-time, how you can help them get unemployment benefits. So We have those resources up on our website, but also Sarah, my colleague, is our go-to person on that. And so in our other webinars, we've been addressing those issues as well. But Carol, what's your question? You're on mute.
I didn't really have a question, but I really appreciate all the information. And after I process all of it, I'm sure I'll have more questions. So are you available at another time and we can just email you, or what's the best way to communicate with you?
Yes, you can email, I mean, within reason, right? We obviously will serve clients, that separately in a different way. But as far as this free assistance, we're trying to do it as much as possible, in groups, by posting. We do have a Q&A that's up on the website. And as we get new questions, we add to it. I will say the agricultural questions are different than what we've received. So, but I think there's, I saw some guidance on that. So I'll track that down and send it to you. Okay. All right.
And just Carol, the rule itself for that SBA published on calculating payroll costs, it goes in depth on the on how you calculate farm costs, but in the instructions itself, there's kind of a brief summary. So you might want to take a look at the instructions to the application itself. And then if you want you want to dive deeper, you can, that information's available, and we'll certainly hunt that down for you.
Thank you.
All right. Well, thanks everyone for joining us. And we have been doing these weekly, so stay tuned. Kind of depends what kind of information is coming, and the portal, the banks do start accepting applications on Tuesday, or they can start submitting them on Tuesday. So they're accepting applications right now. So if you have a bank that you're already connected with, definitely be in touch and find out if they can help you with this, or if not, find another one or let us know and we can help you find another one. So, all right. Thanks everyone. Good night.